We're watching the markets react, of course, to that Fed emergency 50 basis point rate cut amid fears about the virus. What does it mean for the markets? Kevin O'Leary of O'Leary Financial Group joins us now, a familiar face. Good to see you.
Great to be here, Amanda.
We're here to talk about something else, but we do have to talk about the markets,
Sure.
including not just today. So let's start with actually the Fed. Was it the right thing, 50? It feels like, as I said earlier, bringing a knife to a gunfight. It's not really the problem that they're solving.
I would have preferred no cut at all because it's still speculative on how far this virus is going to go. I understand why they did it. The question I have for every investor, and does this make you feel better about investing?
Right, and the answer is no.
No, it doesn't. And what I don't like to see is the collapse of the 10-year and the long bond, the 30. That does not make me feel good. And so I would have said we're going to stay on hold, but they wanted a coordinated global effort. I get that because it's obviously causing some issues in Europe. But it's taking away the bullets that they have for later on.
Right.
And
what are you doing about this? And so let's stay with bonds for a second, because I know you're very sensitive to the fact that, when they go up, you can get really hammered
Right.
if you're on the wrong side of that trade. A lot of people wish they bought the bond a year ago, but they didn't. So here we are. What do you do about bonds here?
Well, here's the dilemma. I'm up 14% on my fixed income portfolio this year.
Right.
Can't say that about my equities.
Right.
On the other hand, do I want to take duration risks like this? Do I want to buy even a 5 or 7 year piece of paper? Even a credit now with these rates so low? I'm very worried about the fixed income side, and I'm forced by the covenants I invest by to be 50% of fixed income. So on that portfolio, as these credits and bonds come due, I'm going to remain in cash for a while to see what happens. Now, everybody that said that last year, as you pointed out, has lost money. We've made a lot of money in the last 12 months in the fixed income space.
Right.
But after you get to zero, it's hard to make money, and we're on our way to zero.
Right.
On the other hand, we were started to buy again on Thursday and Friday, and we've been well rewarded from the bounce back. And I don't know how to time the market.
What are you doing with equities?
So all I've done with equities is go to higher quality balance sheets, getting a 2.2, 2.3% div yield, which is way better than the 10 years giving me. I don't have duration risk. I'm very concerned about
that
debt.
puts you in like financials, which are very
No, I don't
exposed
have
here.
any financials.
No?
I've focused on consumer, industrials. Tech has been well rewarding, the ones that do provide dividends. And I've started to put some money out in Europe because the PE ratios are 20, 30% lower.
Yeah.
Although there's no growth
Maybe
there.
for a reason.
Yeah, I get it. But still, I'm getting a 3.2% div yield on my European portfolio. So I'm not complaining about that. And so my big problem now is I have a lot of cash to put to work. And I know this is a problem for every investor because normally you would blend it between credits, bonds, and equities.
Yeah.
I am not comfortable putting
Nowhere
money
to go.
work.
So the question for the last, 4 years has been, sure, you could sell, but then what are you going to do? You're going to sit on cash. Are you going to sit on cash here?
Well, I had a big liquidity event because real estate assets became more than 20% of the book, and we had to sell it back down to 20%. Cap rates are at historic highs.
Right.
And so that was back in October, and now we have to try and figure out where to deploy the capital.
You are also in a very turbulent market, backing a company that's coming to market through a direct listing, MindMed.
Yes.
This is psychedelics for addiction treatment, which is really interesting.
When I was first approached by this company a year and a half ago, I said, what is this, another cannabis story?
Yeah.
Because it's a Schedule I narcotic. I have come 180 degrees on this thing. The potential to solve for addiction, for things like opioid addiction, for depression, for alcoholism looks very interesting. There's a lot of anecdotal evidence that microdosing psilocybin or LSD can help in these. This is a medicine that they're building. This company is doing FDA-approved research and studies on medicine. There is no recreational aspect to this, so it's not going to run into the same problem cannabis had, where institutional investors never appeared.
Including you. You stayed away from cannabis a long
Never
time.
touched it because
Still?
it's never going to touch it. Schedule I narcotic, lobbied against by Mothers Against Drunk Driving. I've met with them.
Yeah.
The minute you get on the wrong side of that group, that's not good. I want to be on the wrong side. And besides, all of these promises by the industry to get this thing legalized in the U.S. never appeared.
This is a tiny little company, though, right? It was a reverse
they're all
takeover
tiny.
of
They're
an
all
old
nascent.
company. But is this kind of just I don't know, you're taking a flyer on it?
Yeah,
It's
this
not
is
a
a
big bet
binary,
for you.
Amanda, this is a binary investment. Either it's an extraordinary return over the next 5 years or it's a zero.
Right.
And I say that for all the investments in this space. But the team is, all the scientists that I met, all the research that's going on in multiple countries, the actual compounds they have on a proprietary basis, very interested. And a promise from the CEO before I wrote my first check, you will never take this into the recreational market, and he won't. I became an investor.
O'Leary, it's good to see you.
Good to see you, Amanda.
Kevin O'Leary, founder of O'Leary Financial Group.